to sue your regulator when you're running a regulated business, it's kind of like sticking your hand in the alligator's mouth, right? It was something that was bold. It was something that, we only did because we felt we had good common sense arguments and legal standing to do so. And what ensued afterwards was a lawsuit that we tried to keep and maintain as much of a professional, demeanor around it, that this was a misunderstanding, this was a misalignment of interests and things of that nature versus it being construed as anything else.
The content presented on this podcast does not in any way represent investment advice. The information is provided for educational and entertainment purposes. Crypto assets are considered risky investments. You should always do your own research before investing. The opinions expressed here do not represent those of CoinDesk's editorial staff.
Michael Sonnenshein, welcome to CoinDesk Spotlight.
Great to be here. Thanks for having me.
Well, I like to start off by laying a quick foundation for everyone, including you. On this podcast, we really want to get into the minds of folks who have pioneered the industry. And so I'm going to start here because I think it will help us kind of connect the dots as we hear about your contributions to the industry and how you've moved over the last decade. And the question I'm going to start with is, when you look at everything you've done in the last 10 years, what was your biggest failure?
Oh God, my biggest failure, probably not buying enough Bitcoin.
That's not a fair answer.
Not, I look back and maybe it was just so obvious at the time. And I just, was either too young or too naive. And I want to be clear. I never lost conviction in Bitcoin or the crypto ecosystem at all in the God, almost 12 years I've been working in the crypto space. But I wish I was bolder than I was to, think about investing more heavily than I did, and the people around me to get them to invest more heavily than perhaps they did. And if I could look back, that's probably the thing that I regret the most. Wouldn't change the outcome. I'd still be working. I'd still be here. I'd still be fighting for crypto and building in this ecosystem. But when I look back, like, I think there was perhaps a prevailing narrative amongst folks that it's like, if professionally you're doing this, you also have to balance that with your investable capital. And maybe you can't just be 100% in, right? You have to balance that you're doing this professionally. So maybe you need to diversify and kind of be invested in other things.
Well, I think I've heard you say before Bitcoin was at about $800 when you first started talking to Barry
Yeah.
Silbert about it. So I can see why you're regretting that today. Bitcoin's at about 5,000 this morning, but I think that you're probably doing okay.
I'm not complaining, and nor are any of the people that I have brought along on this journey with me. It's funny how if you're in the space long enough, you certainly encounter people as they move around the crypto ecosystem, and people will come up to me and thank me and say, thanks for introducing me to Bitcoin in 2015. Or, I've heard such great stories about investors I've dealt with along the way who have made so much money in crypto that they've paid off student loans, or they've built parks in their communities, or, done all kinds of
Mhm.
things, not just like, Lambos and, a lot of the stuff that crypto often gets associated with.
I want to stick on that point for just a second. I think I heard you in a previous interview talking about, or maybe I read it somewhere, but talking about when you first learned about Bitcoin, what really drew you to it was this idea of financial inclusion and this potential to change the world. Like, sitting where you are today and seeing how Bitcoin has evolved and how it's being used, is that still your driver for working in this space? Do you still think that Bitcoin upholds that promise that really piqued your interest 12 years ago?
I think it's certainly still one of the use cases that does exist with Bitcoin. It maybe isn't happening as fast as maybe we thought it would. But there were definitely early conversations that I had with Barry and with other people in the ecosystem, and certainly investors, that perhaps this new decentralized form of money could be the springboard to financial inclusion. And maybe today, and what is, we're talking during a time of market volatility, generally speaking, a lot of markets have been rattled. There's a sense of questioning of where things are going to go and what is this new world order going to look like. That perhaps these forms of decentralized money and mistrust of governments and things like that, Bitcoin will once again come out as a winner of that volatility and unrest, and give people something that they can actually park capital in and believe that it will potentially do better for them than perhaps trusting value creation or value stability to their governments, which typically control their currencies.
I started this conversation off saying, this show really highlights pioneers in this industry. You've played such a big role in getting the industry to where we are today through your work at Grayscale. When you think about the early days there, a younger you right off of Wall
Yeah.
Street, what stands out? What's that like vivid memory you have of your early days at Grayscale?
I mean, there's a couple of them. So first and foremost, it wasn't even Grayscale to begin with, right? When I first got into the industry and I was working with Barry, it was Second Market, right? And Second Market had only recently pivoted into Bitcoin, a Bitcoin trading desk, and ultimately an asset manager that ultimately became Grayscale. I vividly, to use your word, remember being almost laughed out of the room when we were running around trying to pitch investing in Bitcoin to investors in the early days. We were looked at like we had three heads, or like we were snake oil salesmen. I vividly remember that. I vividly remember, because this is the CoinDesk podcast, I vividly remember being at one of the early, I've been to pretty much, I think, every single consensus event that CoinDesk has thrown, but I vividly remember being at one of the early consensus events, and we did a marketing campaign at Grayscale where we actually entered into a purchase and sale agreement to have a physical bar of gold, an actual gold bullion bar at our booth at Consensus. And we had armed guards there and all this other stuff. And we were really showing tangibly what $1 million of Bitcoin looked like, sitting on a USB drive, versus how ridiculous $1 million of gold looked, and really hitting investors over the head with a tangible experience of like, value can be stored in all different kinds of ways, and certainly Bitcoin would have properties that would outshine gold and make its utility faster, cheaper, more portable, more divisible, et cetera. And so I just vividly remember that as just like a fun, really great way to do what we were doing and bring it down to a place where investors could really wrap their arms around it.
There's so many points I want to get to talking about, what's happened from that consensus to now. I think one of the major milestones is the fact that you sued the SEC, and not just any SEC, Gary Gensler's SEC, and won. I want to get into your head a little bit here. When that lawsuit was brought, what was going through your head? Did you think you were going to win? What did you think that fight was going to look like?
So I distinctly remember having the internal conversations amongst myself and my leadership team, thinking about whether or not we were going to sue. We were at the time, I think, prepared for really all outcomes. And so that's a memory and a time period I look back on very fondly, where the team was just so ready to pounce no matter which direction the SEC was going. And I think ultimately when we did file our lawsuit, there was just such a preparedness. We were so ticked and tied and ready for it. We knew it would be an uphill battle. We knew it wouldn't come without tremendous scrutiny. I mean, to sue your regulator when you're running a regulated business, it's kind of like, sticking your hand in the alligator's mouth, right? And it was something that was bold. It was something that, we only did because we felt we had good common sense arguments and legal standing to do so. And what ensued afterwards was a lawsuit that we tried to keep and maintain as much of a professional, demeanor around it, that this was a misunderstanding. This was a misalignment of interests and things of that nature, versus it being construed as anything else. And I think what was incredible about being a part of that journey and spearheading the lawsuit at Grayscale was just all the community support. We got support from investors, we got support from the Bitcoin community itself, developers, we got support from the industry lobbying groups and the industry groups that were, representing us in Washington. And I just think it was a phenomenal experience, a learning experience, but it certainly didn't come without its risks. And obviously we prevailed as an organization, and that in many cases unlocked what I think a lot of people point back to as this most recent bull market that we're somewhat now, I believe, still in. And it was definitely a turning point for bringing crypto assets into the regulatory perimeter in a way that just hadn't happened yet for Bitcoin. So super proud of that work. And it was just really an incredible chapter.
What a stark contrast from being laughed out of the room just, a handful of years earlier.
Yeah, I mean, it was almost like vindication, right? And I think there were a lot of people that over the course of my, 10 and a half years at Grayscale, maybe some of those earliest people were like, why the hell is this guy leaving JP Morgan to go do what? Go work in Bitcoin? Like, what is that about? That's, he's going to ask us for a job back in a couple months to then ultimately, work to build the team and the business and the profile that, Grayscale had and has as the largest, crypto focused asset manager. So it was just an incredible, incredible journey and one again that I'm just super proud of.
What was the plan for if you didn't win the SEC suit?
I don't know. I have to think back 'cause this is now like 2 years ago. I think there was an entire opportunity for us to go through the judiciary process of appeals and things of that nature. So I think that there was, certainly opportunities to continue. I think there was just so much riding on it, both from the community, but all of our investors and so many people had been so patient with us. They were really depending on us to carry that torch. And, we were just going to kind of, I believe, continue to utilize all of the options available to us within kind of the judicial branch of government.
Now, I want to come back to your conviction in Bitcoin, that financial inclusion piece that really, I guess, rests on Bitcoin's decentralization. Over the years, we've seen MicroStrategy, who now owns 5% of all Bitcoin. BlackRock is involved. Grayscale is here, dominating ETF flows. Talk to me a little bit about how you look at Bitcoin's developments and then juxtapose that against its decentralized nature. Are we losing the decentralization plot, or is Bitcoin evolving in a way that maybe we couldn't have expected it to way back when?
I think there are always going to be multiple truths around this topic. Is Bitcoin still decentralized? Yes, that is true. It is not backed by, a sovereign nation. It has no individual that is, controlling it, things of that nature. It's been battle tested. Has Bitcoin taken on an entirely new persona as it has been deeply, deeply, and continues to day by day deeply be woven into the fabric of our capital markets and our financial system? Absolutely. But that's also true. And so, what I think has been so amazing about being a part of this ecosystem, as long as I have, is that what doesn't kill it continues to kind of make it stronger. And when it faces any kind of adversity, it continues to find ways to outcompete or maneuver and continue to morph and change. I was just talking to an investor today about all the innovations we've not only seen in Bitcoin, but in crypto in general over the last decade. If we go back to 2014, when I first started working in the space, there was no conversation around NFTs. There was no conversation around the metaverse or oracles or any or DeFi. Like these have been innovations that have been born out of the amazing human capital that has gone into the space, and the space is kind of almost lack of patience and lack of comfort with the status quo, and always kind of finding new ways to either create value or destabilize some existing framework or way of doing things. And as we're having this conversation today, like there are things that have not been thought of yet that will become firm parts of the crypto ecosystem in the years to come. And I think that's one of the most exciting reasons to be involved in it personally and certainly professionally.
Why did you leave Grayscale?
It was time. I had been battling, the SEC. I was, out in front of, the media almost every day. And in many ways, my work there, like what I was originally hired for, what we originally as an organization we set out to do, was bring a Bitcoin ETF to market. And that endeavor took us longer. It was harder. It was more expensive than I think we ever could have imagined. But ultimately we did it. And it's work that I was super, super proud of. But I think along the way, I grew up tremendously. I was at Grayscale from my, mid 20s to, kind of my late 30s. And in that same time period, everyone else I knew in crypto had been at two, three, four, maybe even five, different businesses as the ecosystem and new opportunities presented themselves. And I think for me, it was just time to take a breather, spend some time with family, and then kind of think about what I wanted to do next.
In your new role as Chief Operating Officer at Securitize, I know that you speak to asset managers regularly about what we're talking about here on this show. What was the moment or event that helped shift the way some of these asset managers think? Was it the approval of the ETF? You hear that every day. I interview people every day on CoinDesk who say that it was the approval of the ETF, or was it something else?
I mean, for a lot of them, I do think the ETF approval was a really, really strong signal because, again, now that like Bitcoin had been put into our capital markets in a way that it hadn't been before, it was going to be kind of hard to puke it back out, if you will. And so I think to them that did really create a really, really strong signal. But as did other things, right? The development of a robust derivatives market when futures contracts began to be launched, when the IRS came out with guidance on how to treat, the taxation of assets like Bitcoin, when you saw commentary coming out of the Office of the Controller of the Currency, when you saw sandboxes, all of these things have
Mhm.
been developments that I think have been appropriate signals, but certainly the most recent of them that I think did catalyze a lot of people was obviously the ETF approval.
I know we talked about why you left Grayscale. Now you're with Securitize. Just talk to me about joining Securitize. What were you weighing when you were making that decision? You leave this really established crypto asset management firm. Now Securitize is doing a bunch of different things, really kind of starting at the grand level, not yet built a name for itself. Talk to me about that decision.
Yeah, so the securitized opportunity felt like the right next step in my crypto journey. What's funny about it is that if you kind of take a step back and you look at what I did at Grayscale for over a decade, we as an organization and my leading the organization, we were hoping to bring crypto to larger audiences by bringing crypto into financial products. And at Securitize, we're taking financial products and bringing it into crypto, right? By bringing investments onto public blockchains. So there were and there are a lot of adjacencies, vocabulary, acronyms, rules and regulations, et cetera, that all kind of applies to both what I was doing at Grayscale and what I'm now doing at Securitize. So in that regard was a natural fit. To his credit, our CEO and founder, Carlos Domingo, has been running Securitize since 2017 with high conviction in the idea of tokenization and well before terms like RWAs were even coined, no pun intended. And, it wasn't probably until the last 12 to 18 months that this was really an area that people really cared about or believed was going to be one of these use cases coming out of the crypto ecosystem. Like we talked about NFTs, the metaverse, oracles, all the ordinals, everything that's been kind of developed, RWAs are kind of one of those next innovations and use cases we're seeing. And so at Securitize, I have the opportunity now to, I think, be a little bit closer to the technology, which has been really exciting and really rewarding because we work directly with public blockchains and also work with asset managers and asset issuers that are trying to, bring their offerings to public blockchains. So we work, both directly with the crypto ecosystems, but also with asset managers. And it's been really rewarding and a lot of fun so far.
What does success for RWAs look like to you? Like, what is it about? Is it about market size? Is it about accessibility? Is it about new investor classes? What is that future you're building towards?
I think it really runs the gamut. I think today what we're seeing kind of the best and most robust product market fit is around tokenized treasuries. Securitize is the tokenization partner for BlackRock and the BlackRock Biddle Fund, which now is bigger than $2 billion in tokenized treasuries. And so a product like that has not only was not only a proof of concept, but it's actually showing real, traction. Otherwise, it wouldn't have grown to, $2 billion in just over a year. And so that product, I think, is less about democratizing access, and it's a little bit more about creating attributes and features in on-chain investments that are outshining their, traditional counterparts. So in the Biddle fund, which is, underlying holds treasuries, we're actually paying dividends out to holders on a daily basis. When you look at a traditional money market fund or treasuries, those are only paid monthly or quarterly, right? So investors actually objectively are having a better experience by getting access to their capital more readily. Biddle allows for instantaneous, subscriptions and redemptions, right? On the contrary, and again, 24/7, 365. On the contrary, a traditional fund, money market fund, treasury fund, bond markets are closed certain days. There's order cutoff times. You may have to, submit an order by 2 p.m. or you have to wait till the next day, things of that nature. So there is real utility being unlocked by bringing these types of investments on chain. Another good example of this is, the work we're doing with Apollo, with our Apollo Diversified Credit Fund, where that, typically, private credit is a very explosive area of investment right now, but, it's not that accessible in the sense that or maybe there soon will be a private credit ETF, but in general, it's really reserved for people that have direct access to these managers extending credit. And so by having an offering like this, we're actually democratizing access to certain investment opportunities for folks to come directly to Securitize and be able to participate in products like this. So today, these are some of the types of innovations that are coming out of Securitize and our partnerships with public blockchains and asset issuers. But over time, I think we will continue to kind of be weighed down, if you will, or kind of share a burden that we need to continue to innovate. We need to continue to find ways to create utility with RWAs, and whether that's continuing to link them to the world of DeFi or unlocking other use cases. There is definitely an investor mindset and shift underway that thinks about their wallet now as a home, not just for speculative crypto assets, but also a home for their investments, right? It's not always going to be this bifurcation between their wallet and their brokerage account, but eventually you're starting to see a little bit more of an investor mindset that will merge those two together.
I want you to connect the dots for me a little bit. I know that when you first got into this space, it was really enticing to you because of that democratization of access to financial products. As we get more mature as an
Mhm.
industry and we start to see the use cases that prevail, do you feel like we are still focused on that democratization of access, or do we need to kind of prove out these use cases in ways that have worked in financial markets for a very long time before we can kind of realize that dream and that ethos of crypto?
Well, I think the democratization of access is there, right? Because anybody, anywhere with access to the internet can partake in this ecosystem. And whether that's you buy a fraction of a fraction of a fraction of a Bitcoin, or you participate in DeFi, I mean, the democratization is there. Crypto knows no borders, right? And so I think as we're unlocking new use cases and new utility, we are fulfilling that promise because it is opening the total addressable market, or enticing the total addressable market rather, to come and participate in the crypto ecosystem, because we're finding more adjacencies and more ways to connect with more users, more businesses, and more reasons to, be a part of the crypto ecosystem.
You mentioned BlackRock's Biddle. Tell us a little bit more about how BlackRock and other asset managers are planning to employ RWAs. Can you let us into the types of conversations you are having?
Yeah, I think there's a lot of elements to consider when you think about some of the largest, and BlackRock, the largest asset manager in the world, and how they're thinking about, tokenization. There is a distribution angle to it, right? That it's opening up their products to a totally new ecosystem of investors and users and participants. There is elements of fractionalization, I think, that are really exciting and really enticing to folks to want to bring products on chain. And there are feature unlocks, like we talked about, that Biddle, offers investors today. I think for many asset issuers that have brought, one, in some cases, two tokenized products to market, over the last 12, 18 months, again, they've kind of gone from proof of concept to really having real market traction. And so I would venture to guess if we have this conversation again in the next 6 months or even 12 months, you're going to see the asset issuers be in market with more products, and that will span both the underlying product wrappers themselves, as well as the underlying investment exposures that those products offer. So today, it may be tokenized treasuries, private credit, venture capital, things of that nature. But over time, I think you're going to see more and more types of investments also being brought on chain.
Tell me a little bit more about that. What types of investments are you talking about being brought on chain? Which ones are maybe more challenging than others?
Well, I think this is kind of dovetails with what I was sharing with you earlier, which is the burden that we have, right? We don't want to tokenize just to tokenize because it sounds good or it kind of advances somebody's Web3 strategy. We want to tokenize because it does offer a potential for higher returns or the potential for a better investor experience or faster access to capital or better liquidity or things of that nature. So in general, when we are trying to be ever more scrutinizing around the types of products we want to work on or work on with our partners, we tend to gravitate towards things that are more liquid, things that have more frequent ability to be bought and sold, assets that have more frequent valuation metrics applied to them. And I think along those lines, you can see why treasuries are something that, so far has been a really good candidate for them.
You just said we don't want to tokenize just for the sake of tokenizing or advancing some kind of Web3 or crypto strategy. And you bring up a good point there. And I want to ask you because tokenization is something that has been spoken about since the beginning of crypto. We've talked about tokenization in multiple different forms over the last many years. And despite this, not a lot of money and attention has gone towards it. I feel like maybe now we're in a little bit of a different era where we're talking about it more. We're starting to see more use cases. But why is this time different, do you think?
It's different because of who's involved, right? If in 2014, when I started getting involved in Bitcoin, we had, you know, BlackRock and Fidelity and all the names of the institutions that have now since become involved, the journey that Bitcoin and other digital assets went on over the last decade plus would have been very different. The fact that we are as early as we are in the real traction that tokenization is having, and it's happening with some of the largest and most influential investors and asset issuers, I think is going to put tokenization on a very different track and trajectory than other areas. The RWA market in the last year has more than doubled in size. Tokenized treasuries have grown 500-600% in that same time period. They're growing 20x faster the early days of stable coins. So I do think it is different because of who's involved, and that direction is going to be very meaningful as a result of it.
Is there a fight that the crypto industry hasn't realized that it still needs to win to achieve this mainstream adoption that we've talked about for so long through various different lenses?
I don't know if I'd call it a fight, but I'd say we've all, as an industry, been guilty of focusing on, a lot of the development of different use cases and, building brands and building narratives and reputations. And I think sometimes the actual user experience has been overlooked, right? A long time ago, we used to say, oh, like Bitcoin eventually is going to be so easy, my grandmother can buy it, or Bitcoin's not successful until I can buy a cup of coffee with it, or things of that nature. And I think because we didn't make, I mean, yes, it's become orders of magnitude easier, like I said, for people to access the crypto ecosystem. I do think we're moving into this new era where, because the user experience is still clunky at times, that a lot of the crypto rails and a lot of the value could end up accreting to behind the scenes applications. Meaning, like when I Venmo you or something like that, you and I don't, I mean, I actually do know, but most people don't know what's actually happening in the back end that makes my $10 go from my account to your account. More often than not, I care that I paid you and you care that you got paid, right? And so I think we're moving increasingly towards use cases where the crypto rails are so robust and so secure and so time tested that it is in many cases going to be crypto rails that are going to be utilized for asset movement and payments and tracking and transfer and ownership. But the actual crypto UX, the public private pair, keys and pairing of those are going to kind of be abstracted away from the user experience. And I think that's okay.
When you think into the future and you think about how you're going to be remembered in this story that is crypto, what's the headline that you hope is written about you?
Yeah, I mean, that I was a pioneer, that I was an early adopter, that I was someone who challenged the status quo, someone that did the hard work, that somebody that built collaboratively with other people, somebody that, helped build a big brand within crypto, from scratch. Those are accomplishments that, can't really be taken away from me and I hope are things that, I'm remembered for.
That by pioneer word keeps coming up, and there are people who were building alongside you. There are people who are pioneers in their own right for bringing various different aspects of this industry to where they are today. Is there anyone who you think about and you look back on their journey and you think, they actually deserve more credit for their work?
I think there's one person that comes to mind that doesn't get spoken about often enough, and it's Wences Casares, the founder of Zappo, XAPO. This was so early on Bitcoin and was so early on recognizing the need to build institutional grade custody and work tirelessly to run around and convince very influential people that this was not a fad, that this was something that was here to stay. He actually had so much conviction in Bitcoin that when his company raised, they, I think, took some of the money and just bought Bitcoin with it. Smart move because it, gave his company a tremendous amount of runway. But he was so early in his ability to see where things were ultimately going to go and what infrastructure was going to be needed to support the growth of the asset. So I don't think often enough people think about that. And those of you who aren't familiar with Wences, Google him, take a look at some of the speeches he's given. He gave a great keynote at a Coin Center gala a couple years ago. He just is a profound early adopter and certainly a pioneer that deserves recognition.
Michael, thanks so much for joining me on today's Spotlight.
It's been great to chat with you. Thanks for having me.